What is happening, everyone? Hope you're having a great day. Hope you had a great holiday with family, friends, and were able to eat some good food, all of that. Anyhow, I wanted to jump on here and talk about different ways that you can come by a down payment. And what I mean by down payment is anywhere between 3%, 3.5%, 5%. What are the sources of that? Because I believe there's some confusion around, obviously we're going to get into the ones that are common, the most talked about, but I think there's some ones that aren't talked about as much. And so we want to dive into specific rules. And again, I always encourage you to talk to your mortgage professional about your options and making sure that you get it dialed in, because obviously there's a lot of different, I'll give you a prime example, gift funds from a family member are not always a given. That is an option, and we'll get into that. But if we're running DU findings and the DU finding does not like you as a client having gift funds from a family member, then just because gift funds is an option on that program doesn't mean that you would qualify for the loan program based on risk. The system, for whatever reason, may not like you having gift funds, would rather you have the funds yourself. Same with down payment assistance and things like that. So it's not always a given. You always want to make sure that you as a client qualify based on the findings and based on the loan programs, that all other things are being taken care of so that the down payment assistance or the gift funds would actually work in your situation. So it's always good. These videos are just information, education, get you thinking a little bit, asking the right questions to your mortgage professional. But again, never take my information and say, well, this is what he said or this is what was said. Every situation is different. That's why we run each person's scenario and it's unique to them. This business is like putting a puzzle together. Every person's situation is different. Some people have less job time. Some people have 5-10 years on the job. Some people have a tremendous amount of money in their retirement. Some people have no money in the retirement. So every situation is different. And the qualifications, when you're running it through the automated underwriting system, takes all that into consideration and starts eliminating layers of risk to make the deal make sense. And if you don't have layers of risk being eliminated, then a lot of times a down payment from a gift funds family member or a down payment assistance won't necessarily work. What are some of the types of down payment sources that you can utilize? Obviously, the most obvious one is from your checking or from your savings account. That money should be in there. Now, granted, I think there's a misconception that that money has to be seasoned for a certain period of time. In other words, if your down payment's $5,000, that money has to be in the account for the last 60 days, sitting there for a total of $5,000 in the account. Obviously, that's a great way. That's awesome, but that is not necessary. I've had clients that we have taken government FHA and was short a couple thousand, $2,000-$3,000, and we were able to source from their payroll or bonuses or different avenues to make up the difference of their down payment to make the deal work. That being said, savings and checking, it does not need to be seasoned. Preferably would like it for it to be seasoned, but it's not necessary. The other option would be, as we talked about earlier, gift funds. Gift funds can come from family members. There are some workarounds in the guidelines in regards to that, and I'm not going to get into the nuances of that, but preferably it needs to be somebody in your family, an aunt, an uncle, a brother, a parent, a sibling, somebody in the family, a fiance, for example. If that person's not on the loan, fiance is also acceptable. Those are one option as well. Down payment assistance obviously is a grant. That is a OFA program or a MISHNA program or something that's in your state that does grant money, where they will literally have a second mortgage lien filed against the property. There's certain rules and regulations where you have to hold on to the property for a certain period of time in order for that money to be forgiven, but there's no payment made on those down payment assistance funds. Those are available as well. Sometimes the counties will have their own down payment assistance for a certain period of time, community money, things like that, but those do not run year round. Those are usually short-lived and it's on a first come, first served basis. A long time ago, and I'm dating myself in this business, we would have people sell items in their home. Now, obviously you have to be very, very detailed. If you're selling a vehicle, you need a bill of sale, you need the transaction, you need a copy of the cashier's check. There's some things that we need to make sure that are in place. And again, get with your mortgage advisor in regards to that. You want to stay away from cash as much as possible. And I've already done videos in the past about that. Cash is not documented, does not have the ability to be documented. And so you want to stay away from cash transactions. You want to make sure that if you are selling something of value, that you have the value estimated for that particular thing. So if it's a car, for example, you can get the Kelley Blue Book value on that car. You can show that you sold the car with a bill of sale and also a copy of the cashier's check made out to you from the person that purchased it, which should match the bill of lading, and there you go. You have what you need as far as utilizing something to sell a value. Obviously, you can get money from a property of a sale. You can get money from another property that you have. For example, maybe you have a home equity line of credit. You can borrow against that. I've had people that are buying investment properties and use home equity lines of credit for down payment on their investment properties. You can get a loan. Now hear me out. You can get a loan for this. Now obviously those loan terms, that loan document, all that paperwork has to be outlined, the terms of the loan, what the payment is, and that payment has to be included in your debt ratio. You by no means can borrow your down payment money from a credit card. That is an absolute no-no. So make sure that it's a loan, an installment loan specifically for your down payment funds as well. Those are kind of the main points that I wanted to hit on in regards to down payment sources. Again, hopefully this has been helpful to you. Reach out to a mortgage advisor if you have any specific questions. You can hit me up for any questions specifically about down payment sources, but I wanted to let you know that there are many sources out there. A lot of people kind of get stuck in their head. I need this money in the savings account and the bank account's got to be there for a certain period of time and I don't have it, so I can't buy a house. And that is just not the case at all. Every situation is different. Get with your mortgage advisor to discuss your situation specifically. That way we can curtail and put you into something that makes sense for you and your family, which may not necessarily make sense for someone else, because there is not a one size fits all when it comes to mortgages and finance and all of that. So hope that's been helpful to you. Reach out if you have any questions. And until next time, bye for now.